Tonight, it was one of the worst days of the year for the U.S. economy as multiple indexes fell hundreds of points. The Dow Jones saw a tumble of about 800 points. Our Jesse Inman is here to explain and discuss the drop of the stock markets and what consumers are reacting to as well.
Yeah, Heather, today I spoke to a financial planner who talked to me about what the economy is going through. He described it as an inverted yield curve, something that has been a precursor to every recession for the last 50 years.
People are afraid of a recession. There's just a lot of stuff going on. The market's been really good, and people are waiting for that next downturn.
We could be nearing that here in the United States after several stocks took big hits today. Stephen Evans, owner of Evans Wealth Planning, says we're experiencing something called an inverted yield curve, which is throwing things off in the economy when it comes to bonds.
Right now, short-term rates, with an inverted yield curve, short-term rates are paying higher than long-term, like 10-year rates. So you can put your money in something for 2 years and do better than you would if you put it in a 10-year. And it's not supposed to be that way because you're investing your money for longer, so you should get a better rate of return.
Evans says it could be because people are afraid to take risks with long-term investments due to a number of things happening around the world.
There's a lot of stuff causing this right now. Well, we've got the trade war with China. We've got rates across the world at all-time lows, so people start putting, like other countries are buying our treasuries, and that can cause it to go down. The trade war isn't helping. Hong Kong's not helping. The rest of the world's interest rates aren't helping. The Fed may have raised rates too fast. We don't know.
The one thing Evans advises people to do is keep focusing on their money right now.
It's good for people to focus on their goals and what they're trying to do, and don't panic. Emotions can destroy portfolios more than anything.
Now, today, the former head of the Fed, Janet Yellen, says she thinks this is likely a false alarm. And Evans says that back in December, our economy was in a bad way, and we eventually bounced back from that as well. And he also says that people may look at this as an opportunity to buy stocks, with the market seemingly being for sale.